What's up? 20 weeks in of stashing worthy acorns now. I got a great question from Christian Wu about whether worthy bonds pay simple interest or compound interest. We're going to tackle that. I'm going to update the portfolios, get you out of here. It's stashing worthy acorns time. So in my last video, Christian Wu asked a really good question. He said, I heard you don't get compound interest on worthy, just simple interest. So I touched base with worthy bonds to make sure that everything was up, and I was on my right thought track here. And basically, yes, they said since they sold out of the $50 million in Worthy Pure Capital 1, and they had to do another offering in the new entity, Worthy Pure Capital 2, they obviously couldn't issue more new bonds when your interest reached $10 in Worthy Pure Capital 1. So they just decided to compound the interest in both Worthy Pure Capital 1 and 2 automatically. So your money is actually, this is a good benefit. Your money grows faster because the compounding starts immediately instead of when your interest hits $10 and they would purchase a new bond. So you're earning 5% interest on any money that's accrued immediately, so you don't have to buy new bonds. So if you earn a penny of interest, you're immediately earning interest on that penny. So it is compounding faster. So they do pay compound interest, and it is no longer simple interest. So it doesn't matter if you have more bonds or not. You're not going to earn that interest faster because you're earning it on any and all money that you have in. So thank you for that question, Christian. And thank you to my new subscribers. So I'll link to their channels in the description below. I had Michael Johnson, MS Cabray, I guess, and Soraya Nash. I've had a few more, but they're not showing up. So I'm going to have to tackle those for the next week. And check their channel out. Thank you guys for subscribing. All right, check it out. So stash this week, we got $277. We finally broke that $200 range. Hell yeah. Let's click up on it. Let's see what we get. So this week, it was a super busy week for me at work, and I was not able to remember to put my Johnson & Johnson in. So we got a pending transaction here because I actually did it Friday night. After market closed, I was headed to my next overtime job, and I was like, crap, I forgot to buy my stash this week. So I had to log in and check and see Johnson & Johnson is the lowest. So it is pending. And I want to point out, look at Apple. This is crazy. Apple is just blowing up. Look at this. $68.28. I've gained $26.10 out of that, $42 invested. So, and check this out. August 14th, 12 cents of dividends. So that 12 cents went right back in. I believe that is the second time I've received dividends. Let's check. There's 12 cents right there. And then we can come back to May. Yep, there it is. 3 months ago. Look at that. So I'm from 9 cents to 12 cents. Look how that's growing. I didn't have to do anything extra to get that money. So all in all, pretty happy with stash. $200. I've finally eclipsed the $200 level. And all in all, look at that. I started with $50, adding just $5 a week. I haven't done any kind of those crazy free shares for getting people to sign up. So this is just a straight $40 I've made. I've made 25%. And if it continues, we'll see, but just keep investing in quality companies. These are quality companies. It's fine to overpay for quality. What you don't want to do is overpay for something that doesn't make money. Because remember, as I said before, when you invest, you are buying a company that makes money instead of buying a company that does not make money and you hope to make money one day. And check out Worthy Bonds now. So in Worthy Pure Capital 1, if you remember, as I touched on, is at $51.06. And we see I have current interest of $1.06, 5 bonds owned, so $51.06. We check out the interest report, and it's going to be small. So if you remember, they sold out of the $50 million worth of bonds. So I'm going to just keep getting this, but whatever, that's fine. Every day. Let's click on the daily. So it's been stuck for a bit. It's going to take a while to compound, but it's going to happen, and it's better than that money just sitting stagnant in a checking account. And then in Worthy Pure Capital 2, what you got here, $121.25. So I will be adding more to this next cycle on September 1st. Yeah, so a little bit more here. The interest is going to pick up a little bit. You see the dailies, it's still at, 0.168, but hey, that's every day I'm getting paid a penny. And here's the fun one. This is the one that I had taken $7,000 of our emergency fund money and put it into worthy bonds, a separate one that my wife opened up just to see what would happen, because I'm chasing yield here a little bit. So yes, it is a little bit riskier than, probably a lot riskier than CIT Bank where it was. But as I said, I moved some money around, and I've almost replaced all this money I've taken out. So now this is money I can afford to lose. You don't want to, but I can. I'm willing to take the risk for all you people to live vicariously through me and through the channel, which is perfectly fine. So you got to take risks in life to make money, and this is what I'm doing here. And you can see I put in $7,000. I've bought a few bonds, so I've added $100 extra worth of bonds, which is fine. So I had to do some math there. Do some math, and math is hard. Let's see what we get in a day. So we are over $1 a day, and currently we are at 1.0076. And check it out. Look at that. Every day, look at the compounding in effect. Every single day, we're going up. We're getting more money. Yeah, it's fractions of a cent, but you know what? It's money. It'll compound, and yeah, it's been pretty cool. We've earned a good deal of interest so far. That would be $65.93, and we do have a pending transfer of $20 going in. So yeah, definitely a cool thing. Like I said, you definitely do need to take some risk in life. Make sure it's a calculated risk, and this is definitely a calculated risk, and we'll keep progressing and seeing what happens. Acorns is at $197.51, and we'll come down here and check out the performance. And I'm going to show you guys something that has been tough to hide, and it might be a problem later if I'm doing the all-time. So I had a dalliance way back when with Acorns. I had heard about it and I tried it out, and you can see here this was in August of 17. So I believe, yeah, right around summer of 2017, I had put some money in just to see what would happen, and it got up to $1,300, and then I just took it all out. I got tired of it. I wanted more dividend stocks, even though you do receive dividends on this. Yeah, so that's why I've been flirting around with it, trying to get it to the 6 months mark. We've already been 3 months in, so this will be, here's a little bit more, but look at that. I mean, just up. The first money went in March 12th, right as the market was melting down. So yeah, you can see I've made, the total gain has been $27 that I've gained. So it's been pretty good. And then here's the performance breakdowns that I always show you guys. What we do, you can look at it as dollar, percentage, or share-wise. I like looking at the dollars. So as I showed you that, look how easy they set it up, at least for the ETFs. You can click on the large company stock, and then you can go to the prospectus. If you click download here, it just brings you right to Vanguard. You can check everything out. I had shown you stuff from the summary report before. Yeah, this is just something you can do if you're in Acorns to check things out. Now, I will say that they show the management and distribution fees, so 0.2%, the Dapper. Everything here that you need to know is here. I'm not going to go through it all, but the point that I was making is that Vanguard runs this ETF, the VOO, which tracks all 500. So you're buying a little piece of all 500 companies in the S&P 500. And what Acorns is doing is they're paying Vanguard money to own this. So we're paying Acorns, who's paying Vanguard. So as an investor in Acorns, you're getting hit twice by the middleman. So it's not my favorite. And, if I had to do it, I would just go right into Vanguard. I would open up a Schwab, or I know you Robin Hooders out there like it. I would open up Robin Hood and just go ahead and use that. So these are the prospectus reports. Definitely interesting. They show, break down what all the fund is about. So, yeah, something cool you can check out on your own. I'm going to check out the weekly chart too. Wrap it all up here. We see Stash is just over 200, Acorns right behind it, and then Worthy Bonds as that's going to pop up when I put those new bonds in on the first of the month, so that'll jump up $20, so it'll catch up to those guys. It'll be right there. So you can see everything just boom, 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 up and to the right. That's how you want to see it. And I will be curious to see in 20 more weeks if we're still up here, if we're up over 250, or if we take a dip and tumble down. Nobody knows. The future will always surprise us, always. That's it, another week in the books. Check out my video I did about how Warren Buffett apparently is a listener to my podcast. He took after me and bought some Barrick Gold. Check that out, and I will talk to you guys later.